Best day of the year for me personally. We're going to start it off with our clear lead bulls, Cron and ACB, both getting an upgrade and volume pouring in. We're going to cover the big five, the tier 2, 3, and then VFF and T-God. A little bit rushed today, so not going to do our usual large array of tickers. So I'll go over my personal trades for Cron and ACB on the signals for me to get in for today. We had this daily equilibrium that's been playing out for over a month at this point. That broke bullish today on Cron, and that was a signal that allows me to hold longer. So as you know, I'm a day trader and I have commitment issues, so it's hard for me to do more than just quick flip, lock in these gains, and then do it again every day. But in this scenario, when you have such a clear longer term pattern breaking bullish, that tells me that, number one, it's more recognizable to more traders, so we're likely to get more follow through. And number two, the amount of volume behind it was clearly standing out, specifically ACB, one of the highest volume days of the year on the US side of things. But those two factors had me hold longer. Another little trick that I did today that I'm going to start doing more often, I didn't look at my account. So if I looked at my account and saw that I had a 2-week maker, 3-week maker, whatever it is, I would be more likely to begin locking in profit. And by not looking at my account at all today in terms of seeing the profit number, that allowed me to hold longer. So my initial entry into Cron was based on correlation. So I was watching ACB, Cron, and the rest of the MJ names, the major names, correlated to SPY. And I could see very clearly that there was a bullish correlation where SPY would go down and Canadian MJ would definitely correlate and slightly go down. But every time SPY would go up, we'd go up with it. So it was almost like every time SPY took 2 steps back, 3 steps back, these MJ names, specifically Cron and ACB, only took 1 step back. And then every time SPY took a step forward, they took a step forward with it. So that keeps you in a very bullish positioning with the S&P 500. But there was one thing that was very notable for me, and I almost made a terrible mistake trading Cron today by letting it run away from me. So I missed the initial bull move. This is the 1-minute time frame. And I did not care about missing the initial move because I was focused on ACB first thing. So my first trade was ACB. We'll go over that in just a second. But let's compare Cron with SPY on the 1-minute time frame because SPY gave us an equilibrium that I want to look at. And that equilibrium is what almost faked me out. So looking at today's action, and in the background we have SPY. So it was right in here. So here's SPY on the 1-minute time frame giving us this clear tightening equilibrium that continued to play out. During this equilibrium, we had an equilibrium on the 1-minute time frame for Cron. As soon as we broke bullish on SPY, again, it's the kind of setup where the correlation for the MJ sector was bullish versus SPY. And so we're sitting there saying, oh man, these MJ bulls are positioned so well to respond bullish if SPY can break this 5-minute equilibrium bullish. So at this point, I was already in a position and I entered on this little brief consolidation here before continuation. And that was, again, just seeing the strength behind Cron and seeing that we broke 22 resistance. The only resistance left was the daily break of 22.27. And I could see that it was likely that we were going to get that bull break because if SPY broke the equilibrium bullish. The minute that SPY broke the equilibrium bullish, Cron dumped and Cron saw a clear bear break and we dropped 30 plus cents. So I exited at 22.20 as soon as this bear break occurred because I didn't know what was going on. This was absolutely not what I expected. So if I'm sitting there looking at a chart and it's giving me the complete opposite expectation that I have, I'm going to exit and lock in my profit very quickly. My initial entry was at 22.10. I exited at 22.20 to be protective because I didn't know what's going on. We're dumping when SPY broke bullish. The correlation just flipped on a dime, and that's very unusual. So after that played out a little bit, I watched this consolidation and I said, all right, well, that wasn't too bad. I was protective. Let's get rid of SPY. I protected myself. We didn't see an all-out dump. This is still looking like pretty fine consolidation as far as the 5-minute time frame goes. And that was right here. I said, all right, that's no big deal. I'm going to re-enter right at the same exact price that I exited. And that's something that newer traders really struggle with. You can sell and re-enter on the same move. So I sold to be protective, to protect that profit. My entry was a little bit late. I didn't want to go into a red position. And I re-entered at the exact price that I sold. I think I got filled for 22.22 actually. So I gave up 2 pennies to be protective. So that's pretty much an insurance cost that I had to pay. but I re-entered for the same price. Then we just played out the 5-minute equilibrium that got a clear bull break. Look at the volume pour in. This is very unusual volume in the middle of the day to see that kind of move. And then at that point, it was, okay, we have clear bull break on the daily. We're going for all-time highs this week. And we could see the bull volume piling in. And where we closed here at the end of the day, we're now currently about 6-7% from this all-time high. And considering we went 10% today, we can certainly see the bulls this week try and take out that 25.10 level. So a very clear bull signal, follow through behind it. And again, the lesson for me was, number one, don't look at your account to look at those gains. And number two, get back in a trade, even if you exited, if the conditions are right. And again, that's something that I do often, and it's something that's really hard. It took me, five years into my trading career before I was able to exit on a move and then re-enter on that same move without feeling like I was making, big mistakes and just magnifying losses. So that was the first trade. ACB also held this one long term. We could see something was up with ACB right at the get-go. I woke up at 7 a.m. and I got online and I said, okay, something's up with ACB. We have 150,000 shares traded, and everybody else pre-market has about 5 to 10,000 shares traded. So it clearly stood out. And from there, we just saw volume pour in all morning. So what I did is I watched the open on ACB, and we saw a little higher open. I said, all right, that's some nice strength. We hit the high of the day. And actually, let's see if it was a shorter term time frame I was watching. So we hit a resistance level early on at 750, and then we consolidated. And I sat through this, looks like 5 minutes of consolidation, and as soon as we broke a new high of the day, I was in. So I entered on the bull break of 750, got filled at maybe 751, 752, and then just held it. And the reason I just held it from there is because, again, volume was so clear that there was something up and going on with ACB. The 5-minute uptrend stayed intact the entire morning, so that made it easy to hold as well. This consolidation right here, I zoomed out to the 15-minute time frame, and I said, all right, that looks like a really healthy bull flag, and I actually added on that consolidation as well. So I increased my position, assuming it was a 15-minute bull flag because the volume was there, and then we just got nothing but continuation all day as the volume continued to pour in. So I am currently swinging a position in Cron. I did take partial profit in Cron. I took half of my profit in the low 23s, and now I'm swinging the other half, and I am swinging my ACB position, both roughly the same size in terms of dollar volume. I am looking to take profit tomorrow on these positions because, again, the hourly time frames are extremely overextended. And if you remember this last time, I took my profit in the 780s on ACB back on February 27th. The reason being the hourly chart was very overextended, and we're there again. The difference is this time there's a lot more bull volume behind it. So if we get a strong open tomorrow morning, I will be locking in profit again in these names to be protective, to lock in that multiple week maker, and then to just start with a fresh, clean slate and to do it all over again. And again, Cron as well, no hourly support established, very overextended. CGC did not get the daily bull break yet, so there's potential it's going to be a laggard. It came within 14 cents of this bull break, unable to break it though. Have to get over 48.40, and then we're looking up at 49.86 as the next resistance level. If CGC were as strong as Cron, we would have broken 48.40 and 49.86 today. Obviously, that's not the case. In 2018, the vast majority of my profit, I think the total profit of my entire accounts, let's see, about 60% of that total profit was CGC trading, and I traded CGC like a madman in 2018. In 2019, I've been trading CGC or trading Cron. And the reason for that is obviously this massive bull run in January and then all the volatility it's given us. So I have changed from CGC being my lead horse, the name that I study, and I am very comfortable trading day in and day out. And now that name is Cron for me. And that's also something that's very important. If you have a name that you focus on, you get really good at being able to trade that name. And so I always have the name that I focus on. I will jump around and trade other names. But if you have a name with consistent volume, you can look to make your day makers off of it consistently each day because you're used to how it moves. So that's where I stand for Cron. And 2019, the vast majority of my MJ profits are in Cron. So CGC has to break 48.40 tomorrow and get follow through. Our new daily higher low is 45.65. As long as that holds, the bulls are keeping the uptrend in their favor. And we'll see if we play the laggard game on both APHA, which was red, and CGC, which was obviously not seeing the strength of the other names. So APHA bulls looking longingly at the rest of the sector, but it is a daily inside bar. There's no red flags. The only red flag is the fact that we didn't see any kind of bullish action today. So a break of 1021 is bearish and has us looking at 1003, and a break of 1052 is bullish and has us looking at 1068. So tight range on the hourly. You can draw this nice little equilibrium, putting extended hours on. We're looking at high of 1075, low of 1011, lower high of 1055, higher low of 1021, lower high of 1052, trying for the higher low down here at 1026. Not confident that that's our higher low as we haven't bounced off of it enough convincingly yet, but watching for 1026 to potentially be that higher low. And just a clear, tight range. This is one to watch. You know, even though ACB and Cron had all the gains today, if I lock in my profit tomorrow morning, I'm going to be focused right on APHA and see if we break this equilibrium bullish and try and see some money shift around back into APHA to try and make a test of 1095 resistance. So we'll see how that tight range breaks tomorrow. TLRY, bulls are nowhere to be found today. And again, it's all about that weekly level of 75.25, and the bears are closing in on it. New resistance level established at 78.44. Bulls have to hold 76.08 and break 78.44 to change this hourly trend. And it looks like we actually did get a little higher low and a higher high first thing this morning, but then just faded all day. So I'm not interested in TLRY at all until this weekly equilibrium breaks. And right now it favors the bears. And right now there's a lot of more bullish trades to be had out there elsewhere. OGI, blue sky follow through. So this is what a blue sky breakout is supposed to look like. Close at the high of the day. Really nice continuation with some solid follow through. We did see some profit taking again, but it's just an hourly higher low looking to form. 918 is currently that higher low attempt. If the bulls can hold 918, they're very strong tomorrow morning, and we'll look up at 950 resistance. And if we break 915 or 918, we're just going to be looking for an hourly higher low to form, but there's not a lot of clear support nearby. The last thing the bulls want to see is a bull attempt to break 950 first thing, and then a bear break to a lower low, because that will lose the hourly uptrend and tell us that some daily consolidation is coming, which wouldn't be a big deal. Daily consolidation would be healthy. We've seen higher lows on the daily for 7 days in a row at this point, so we know we need a daily higher low eventually. So losing the hourly uptrend isn't the end of the world for the bulls, but it's something to be watching in the short term. TRST, still holding on well. This is a scenario where we got that lower high and lower low on the daily with not a lot of bear follow through, which means zoom out and look for the potential of a flag. That's a bull flag on the weekly time frame at this point. If the bulls can break this daily inside bar bullish by getting over 1220 tomorrow, the odds that that weekly higher low of that bull flag has been established will increase. If we break it bearish at 1165, we're going to still be looking to pull back, and we're going to be watching for red flags, because right now there are no red flags, and it's extremely healthy weekly consolidation. HEXO, inside bar as well. So we saw the bulls buy the dip yesterday, but no follow through today. So we have to be cautious because we did lose the daily uptrend. So support is down at 722 and 713. Resistance is 738 and 745. So I don't really like the setup on Hexo right now. It's not clear enough. There's a lot more better, clear setups in my opinion. The weekly time frame still in an uptrend. We know that much, but I want to be waiting a little bit for some clarity on either the daily and weekly time frame, because right now this is a little bit too choppy, and I don't like the fact that we did just break to a little lower high and lower low. VFF, inside bar as well, but closing down near the low, 1440, 1415, and then the gap fill at 1407 are the three levels of support to be watching. 1536, 1575, 1625 are our three resistances. So if you look at that on the hourly time frame, looks like a tightening range forming. Let's see if it's more clear on the 4 hour. Nope. So high, low of the pullback, lower high, and we're going to be looking for a higher low to form. Ideally, the bulls can hold 1440 tomorrow morning and see this range continue to tighten up. If that's the case, we would look for a break perhaps tomorrow afternoon. T-God, nice save by the bulls after the profit taking yesterday. So remember that little hourly bounce where we said that's not a strong bounce at all. We have to be cautious if we drop down to a lower low here. We ended up getting that bull break, and that was a lot of follow through. So a nice recovery, but if we zoom out, the odds of a lower high are more likely than not compared to 457. So we'll look for a lower high compared to 457 and then a higher low compared to 404. So this is the main range that I'm watching, 457 to 404. Looking like we may be forming a lower high at 445. Tomorrow's going to be very telling. If we can't break 445 in the first 30 minutes of trading tomorrow, we're going to look to pull back and form a higher low, perhaps in the 420s, and see this hourly range tighten up. So that's where we stand heading into tomorrow. Congrats to the bulls. Let's see if Kron can get blue sky breakout. Let's see if CGC can follow along as a laggard and break 48.40. Let's see if APHA can break that tight hourly pattern bullish and play some laggard action as well. And let's see what is up with this ACB volume, because that was big. Thanks again. See you soon. Do good things. So continuing onward, chapter 3 of our adventure started in Charlotte, went through Smoky Mountain National Park as I was headed west, headed up to Mammoth Cave in Kentucky for this chapter, and also to Land Between the Lakes National Recreation Area between Tennessee and Kentucky, with the goal of continuing westward towards Colorado. So here in Mammoth Cave National Park, that's my tent setup. I've got a very easy to carry light one-person tent, lots of mesh on it, which I like because when I sleep without the fly on, it is great for, feeling exposed and being out in the open, and great for sunrises. There's my hammock. There's my pack. I think it's a 55-gallon or 55-liter pack. And I did have a mat at that point. The army mat that I was sleeping on was from my previous road trip where I learned my lesson, paid for a $100 sleeping mat, and it was well worth it. So I unfortunately didn't have a good experience in Mammoth Cave, not because of this spider. That was a nice little jolt in the morning as I went to pick up my bag. But the reason I didn't have a good time in Mammoth Cave is because it was June and it was the summer and ticks were everywhere. Literally every night I would go back into my tent and have to take off all my clothes. I end up naked in every chapter. I guess that's the way it goes. I had to take off all my clothes in my tent and literally pick over a dozen ticks off of me every single day. And of course, I got most of them, but some of them did latch on. And of course, that's significant exposure to Lyme's disease, which is no good. So avoid these areas in the summer because ticks are rampant. I'm not, exaggerating when I say 10 to 20 ticks pulled off my body every single night before I would go to bed. So these are some nice seashells that I found out on the area as well. This is heading towards Land Between the Lakes, Tennessee and Kentucky. And there's a nice elk lady. And they had this conservation area of 700 acres. And it's pretty much giving you a taste of the animals that are to come out west as you continue towards Colorado and towards Wyoming and all these states. They've got elk and bison and all that just out in the wild. This was a conservatory, so you could go in and drive around and check them out. And of course, the best part about road tripping, or one of the best parts, is the sunrises and sunsets. They are everywhere in terms of being frequent every day. And it's great because they're so different. So you have, all these different landscapes and different cloud covers, and just every single one so much different than the next. And that was, the highlight of the day oftentimes in terms of things to look for. And one thing that I loved to do on these road trips was find a spot into the dusk, because animals are most active early in the morning and in the evening at dusk. And so if you find a spot at, an hour or two before the sun sets and you sit there and you do not move, animals will interact as if you're not there. They obviously know you're there to a certain degree, but, I've been able to sneak up on some animals just to see how close I could get. And I got real close to a baby elk. I'm sure I have a picture of that, but to be able to just be really silent and not move, nature goes on around you, and then you just observe. And I love observing nature. It's one of my favorite things to do. And, people meditate, and that definitely helps calm your mind. I would never sit out and intentionally meditate. The way I would do things is sit down and then just be still and let my mind completely relax, and just, feel into the environment around me. That's my way of meditating, and that's how I calm things down and stay very even keel emotionally. And that definitely has an impact on my trading as well. So it wasn't, this strict meditation practice. If you're living in a city, or if you have, surroundings where you literally need to lock yourself away to be able to meditate, that's one thing. But when you're out in the middle of nature, it's almost like forced meditation when you're the only person around and you're in the middle of this vast expanse. So that was chapter 3. We're going to continue heading westward into tomorrow, and we'll check back in then. Have a good rest of your day.